Hey there, Forex traders. In this video, I'm going to explain why round numbers matter in Forex. Secret round number levels in Forex are price levels that are not commonly known or discussed among traders. These levels can still have significance as they may represent levels where large orders are placed or where institutions and banks have their take-profit levels. Keep an eye on these levels and their potential impact on price movements. Round numbers are price levels that end in zero, such as 1.0700, 1.0800, or 1.1000. These levels are significant because they represent psychological barriers that traders pay attention to. When the price approaches a round number level, traders may expect the price to either break above or bounce back down from that level. The reason why round numbers matter is that they can act as support or resistance levels, depending on the direction of the price movement. If the price fails to break below a round number level, it can be a sign of bullish pressure, and the price may rise. On the other hand, if the price breaks below a round number level, it can be a sign of bearish momentum, and the price may continue to decline. In summary, round numbers are important price levels in Forex that traders pay attention to. They can act as support or resistance levels, and breaking above or failing to break above them can provide signals of bullish or bearish momentum. Keep an eye on round numbers and their impact on price movements. If you're enjoying my content and want to see more, be sure to hit that subscribe button and turn on notifications. By subscribing, you'll never miss a new video and you'll receive weekly updates on the latest strategies I've discovered. So what are you waiting for? Hit that subscribe button now.